This is FinTech Futures at FinovateSpring, and I'm joined by Charles Potts of Independent Community Banks of America. Charles, how are you?
I'm good, thank you, Paul.
Excellent. How are you enjoying the conference so far?
This has been a good conference. I appreciate what Finovate has become. I've been keenly involved since its origins, and I really appreciate the opportunity to come here and share some of the things that we're doing from the community banker's perspective.
Excellent. So, just get started then. I'd like to give a quick introduction to yourself and your role at ICBA.
Yeah, so I'm the Chief Innovation Officer at ICBA, and it's a role we created just a few years ago to really help foster and lead a key part of our mission, and that mission is to create and promote an environment where community banks flourish. And part of that is making sure that our community banks around this country have access to the types of solutions and innovation and technology on par with the biggest banks on the planet that give them the ability to serve their community and their customers in a way that we all have come to expect in this kind of evolving digital world.
Sure. And you're here speaking on a panel then about how community banks and credit unions can compete in the digital world, as you just mentioned there. Given smaller budgets of these firms, how would you say they should be approaching their digital strategy then?
That's a great question. So there's really three parts to that, and you kind of take the kind of build, buyer, partner view first, and so to a large extent, the community banks, and it's part of what we do through our Think Tech Accelerator, have to expose themselves to a whole new level of solution providers that heretofore they just didn't know that exist, or they were really shunted towards some of the traditional core vendors. And so that exposure to these types of companies that are here at Finovate as well is really that first step. And then the second step really is understanding what the bank's strategy is and figuring out what problems they're trying to solve. And that's a keen focus of the way we approach this, is making sure this isn't just some kind of shiny object pursuit, and it's more driven by real tangible issues that the banks are trying to address. And then the third part is making sure that those collaborations, those companies are really geared to do business the way community banks do, and that is an important part. But it's important to note that with the technology evolution we've seen in the last 10 years, our banks do have cost-effective and affordable solutions that meet their budgetary requirements and can give them the types of capabilities they need to be competitive and address what their customers and communities are looking for.
And given the rate of technological change at the moment, faster than it ever has been before.
Yes.
How difficult is it for community banks?
Well, that's probably the first step in this journey for not just community bankers, but really lots of different industries, and that is recognizing that the lean approach, the agile approach that the technology companies take is also important for a lot of our banks to understand that they need to think in shorter duration, faster cycles, move a little bit quicker, kind of the fast fail methodology. And that is something that that sometimes is unsurprisingly that they actually showed themselves during the PPP crisis. During that time, they went fast. They were able to do this. They were able to make those changes. So embracing that as really kind of a new way of approaching innovation is a key aspect of this. No longer do banks need to think about these 18-month long big engagements and long clumsy project cycles. They need to think in smaller bites and smaller iterations that can take advantage of, again, the technology that's built to be delivered that way.
Excellent. So what are some of the kind of most exciting tech developments in the space that you're noticing at the moment?
Yeah, so right now we're, with this new evolution of our accelerator program, as we brought it in-house and standing it up in Atlanta, Georgia, we're getting very much more aligned with topical current issues, and right now it's all about deposits and it's all about faster payments. So I'm pretty excited to see a lot of the new solutions that can really help our banks address the needs to not only retain key deposits but help them acquire and secure more deposits in a more cost-effective way. And then obviously the faster payments movement, FedNow coming at us, real-time payments, provides a great opportunity for our banks to again take advantage of this evolving landscape and do it in a way that really addresses being cost effective, being efficient, and focusing on the right way to serve their customers in that high-tech and high-touch manner that is unique to community banks.
Excellent. You mentioned the accelerator program there. Can you tell us a little bit more about that?
Yeah, we started a little over 4 years ago with this notion that we needed to find solution providers, early stage companies, who could be groomed and molded and coached and mentored to do business the way community banks need them to do business. And so we sought about doing that. We built this once a year program. We've had a great deal of success with it, helped bring some 41 companies through the process. And at the end of last year, we made the decision to really house it ourselves and run it year round so that we can run multiple programs, we can run a little bit faster with smaller cohorts, and we can get really granular on what are the important issues like deposits and faster payments right now. And here we are, we're about halfway through this first version of our new FinTech Accelerator program, and we're already seeing resounding success, lots of accolades from our bankers and the fintechs that we're working with. And we believe this model is very important for us to, again, back to your earlier question, be able to adapt to a very fast-paced technology evolution that's happening around us.
Excellent, excellent. And loyalty and customer service are often kind of touted as the big things when it comes to credit unions and community banks and stuff. I mean, what else do you think kind of keeps people coming back to these small institutions?
Well, the relationship is everything. Yeah. The fact that community banks, are doing almost 2/3 of all small business loans, 80% of agricultural loans, reinforces that they have a very important role in the communities they serve, and those bonds have to be protected even as the banks evolve their technology. So the banks have to be very intentional and thoughtful that they're not just pursuing technology for technology's sake, but that it fits the strategic goals and objectives of serving their customers the way they need to be served, giving them the convenience that the technology affords them, but at the same time, making sure that the banker and that relationship is tightly coupled to those solutions. Last thing the community bank wants to do is really disintermediate the relationship by driving a customer down a very monolithic digital channel and not giving them access to the important people skills that are part of nurturing that relationship.
Excellent. It's been a bit of a tough start to the year kind of in the US banking scene generally.
Yeah.
How has kind of like the collapses of these banks and stuff impacted the community banking space, and how important is it to protect community banking as a whole?
So I'll take the second part first. I mean, the fact is, if you look at Small Business America and you look at what happened during PPP and what's happened over the last couple of months, what you recognize is the diverse nature of our community banks is key to our economic engine here in the U.S. Small Business America is where jobs are created, and community banks are helping fuel that growth. Secondly, the community banks rose to the occasion, as they always do, and highlighted the really good work and the differentiation between community banks and those too big to fail banks who really were at the center of the challenges we've seen over the last couple of months. Also, what has been real interesting is if you think about some of the fallout from some of those challenges, a lot of small businesses recognized that they needed to be doing business with a banker, not just a bank. So our community banks were there to rise to the occasion to make sure that a lot of the small businesses, a lot of those entrepreneurs who were worried about making payroll that infamous weekend, had a community bank relationship and had somebody they could lean on, had that business card and that phone number of the CEO of the bank that they could call on when they needed help for their small businesses. And I think this has been, once again, a manifest of how important community banks are to small business America and the economic engine that drives communities all over this country.
Excellent. Well, thank you so much for taking the time out to speak with me, Charles. It's been a pleasure.
Well, I appreciate it, and I appreciate the opportunity to catch up as well. Thank you.
Cheers, Charles.